Good day, everybody. We're looking at euro dollar live market. The market is open, it's live, no back testing and no offline chart. And of course, there is no market replay. Let's look at the 5-minute chart at first. So here's a 5-minute chart. We have these equal highs and these lows. Let's go back to 2-minute chart. Over here, we have one bull trap. This is a bull trap only because the price made a new low. Today, after 3 a.m., which is here, the price made a new high and did not exceed that bull trap. Actually, the price came short to the zone, and that zone is this high. Once that happened, it started selling off, and that sell-off was with closing below 1, 2, 3 bullish candles in the 2-minute time frame and inverted this fair value gap. So let's have this fair value gap in orange. Currently, we are struggling with the 50-period moving average. If this gap holds, we can expect the price to decline and aim toward our targets. So let's see how this trade plays out. One more return into the fair value gap. We are having these wicks. These are good signs and good signatures. So we should hold on to our trade. Now we have a better dollar cost average. And for that regard, 150% of the risk will be slightly below these lows. 1-to-1. The next contract is also activated. So we are 2 standard lot size in. Close above that fair value gap. We should get ready to invert that position and target those equal highs, which is visible in the 5-minute time frame here. So we inverted that position, targeting those equal highs. We can add to our we can add to our long position a bit later. Stop goes here. To add it, we can use the same range. Now the risk to reward is much better. I added more. I have a wick in here. If the price closes above half of this wick, I will add to my position. 43 seconds to this candle close. Now, as for the partial, if I go to 5-minute time frame, we have 2 liquidities, one in here, another one right there. So half of this is where I would like to exit half of my trades. Let's go back to 2 minutes. I can move this stop slightly higher. The price took out that high, and now we are having a wick, reducing the risk. The first target is hit. Beautiful delivery. Now I can move this stop to break even, waiting for the price to take the other high. Very nice. A big jump up, and it's done. Let's go through this trade one more time to explain what happened. So going to daily chart, my main bias is, of course, bullish. We are above the trend line. This green candle is a bull trap. The price closed above half of it here. So the next target can be June 17 wick, which is half of this tail. Now going to the 5-minute time frame, we are having a different scenario. At the 5-minute time frame, I have noticed we do have high, and that high, if it's respected, which is respected here and here, we might have a dip in the price. I might go short again based on what I see in here. We are having a sell-off. Going to 2-minute time frame. So this is where things get very interesting. This is 2 a.m. London pre-session. The price has tailed below a liquidity, formed a hammer, that's passive buyers, and then it went all the way up to this bull trap, and it came short to a zone because we had a sell-off. That's why my first sell position was initiated. After the price inverted this fair value gap, which is also halfway, more than halfway of these 3 bullish candles, closed completely up below it. That's a break of structure. On our way up, we added to our short position. but we got stopped above this wick. I mentioned I'm looking at this wick in here. After we got stopped, I added to my buy position twice, here and here, and now we are having that sell-off. So the sell-off, we might be able to go short. For that purpose, the price should close below half of these chain of bullish candles. That's below 1473. It did. Now let's try half of it to enter short position. Stop goes above the close of the sell-off. Let's try one short, and over here we can increase. We have a break of structure. That break of structure left one fair value gap. There's one. The second order is active. I would like to add one more to that sell position. So that was the last one. This gap is inverted. Let's highlight it in orange. Half of this bull trap should be respected. That's very important. I don't want to see a big close above it, or if it closes above, I want an immediate return. If it remains below that fair value gap, that would be very good. But if you go to 1 minute time frame, we do have another inefficiency in here. You guys can see that in the 1 minute time frame. Let's see if this is going to be the London high or something else. Time to manage our trades. So we enter short position. That's the average price. We always take out 1-to-1. That's our first partial. Second partial is 150%. The third one would be the runner. The price is going to our target with speed. And now it's below the 50 period moving average from the 1 minute chart. But let's go back to 2 minutes. So far, so good. Once the first partial is taken, I will move the stop slightly lower at the 50 period moving average of the 2 minutes time frame. But the first partial is taken. Now the second partial is 150%. Now, since we have a new high, I would like to risk slightly less. For that matter, I can go to 1 minute time, and yep, this is a good price to leave the stop. I decided to exit only half of this 300. The price is returning back to the same fair value gap after it touched the 50 period moving average. This is providing real support to the price. I have a new high. I can decrease the risk by moving the stop to the current high. It's better. Now, even if the price takes my stop, I will be still up by this trade. The sell-off speed has increased. Now I have a new high. I can move the stop above this wick, and now it's risk-free. That partial is taken. Let's look at that trade. All right. Now that's a runner. To set a profit for the runner, that would be these lows, but the price might come short to this low. So I would like to exit slightly here, and another one right there. I set 2 more pending orders as partials. The remaining 50 will remain as the real runner until the price returns all the way up and takes the stop at the break even. Actually, let's do that below this low, because we have a fair value gap here. You guys can see that. This is a bear trap, a breakout, and then the uptrend continued. So let's see. Euro dollar took another partial. Price has tapped into half of this wick, and the other partial is also closed. Very good trade now. I hope you guys like this episode. If you have any questions, feel free to use the comment section, and I will see you in the next one. Stay safe, stay observant, and always protect your capital with stop loss.